Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 4th day of December, 2013. We're winding the clock down there, and this is the daily report for gold and silver. Fairly strong spike to the upside in the precious metals markets as they react to a report that came out from ADP, but mostly it is cited that what we saw was technical short covering or buying in the marketplace today. It is off of the highs. The highs very significant at 1252.90, currently trading around 1244. Still, that puts it up about $20 or $21 on the day. The low was a new low that we got in evening trading last night. This has been a most interesting day in the marketplace. Was 12.11.10. So it's had roughly about a $42 range in the market. Currently trading, as I said, up about $20 on the day. Silver also up sharply today. Actually, that in terms of percentage gain, up about 3 1/3% is the percentage gainer. Currently trading 1975, the low 1883 and the high 2002. We'll talk about silver towards the end of the show. Interesting day in the market. You know, being in Hawaii, the interesting thing is we are the last time zone. So being in the middle of everything, I'm able to monitor not only the trading, which of course is early in the morning for us here for New York as that opens, but Hong Kong, Australia, London, and kind of follow it through as it spins around the globe in terms of global trading. And what we noticed yesterday was we had this definitive resistance that was sitting at around 1225. We saw that by the nature of this consolidation that we had over the last few trading days. And interestingly enough, as the market opened, it traded unchanged to a little bit higher, but actually dipped down. You can see this low. This is the low sitting at 1211. So we actually had a lower low on the day when we consider that the lows previous to that were just relatively above, call it 1218, 1219 in that area. But there's no doubt we had this intraday low, but that was to be short-lived because as you can see that we're looking at an hourly chart, so you can see this hour by hour, but we had this slow recoup. It went into positive territory. From positive territory, by the time the market was opening in New York this morning, it was opening up around $3-4, and then we had this tremendous spike. It spikes up to hit that high of 1251, and what I meant by it being significant is we have identified some real strong resistance based on this triple top that we can see right here. Again, very short-term studies, but nonetheless valid, in that each time the market attempted to come up to this area, it was thwarted, it was stalled, it was met with a lot of selling in the market, which simply put would push this market back lower. Now, we had a scenario where we actually did make a lower low in terms of on the trading day, intraday. We've also made a lower high when we consider that the high of 51 is shy of this triple top here. Now, the big news is going to be the jobs report, which comes out on Friday, and there's anticipated numbers. The sense is, of course, if it comes in much greater than expected in terms of number of jobs added, that could be very bullish for the dollar. Something that's bullish for the dollar, of course, is bearish for gold. So there is some thoughts that there could be significant pressure. On the other hand, depending on how the report comes out, we could see a rally in the market. My sense right now is that this market is probably finding some resistance in this area. And the one thing that we can notice is that it has really come off of these highs, now trading at around, as I said, about 1244, about $10 off of the highs. But when we look at this chart, let's go ahead and blow this up a little bit. We can absolutely see this tremendous spike up, and from there, this is our resistance 51. That was followed by 2 hours of lower trading, and now it appears, at least on a tentative basis, because this hourly candle that's forming, of course, if the market breaks down or breaks lower, will turn red, but for right now, it is green. And so the question is it going to make another stab? And when I say stab, is it going to make another attempt to really take out this 1250, 1255 area, or have we really seen the top of this market and it will begin to drift lower? Of course, that's the $64,000 question. One thing that I can say, and one strategy, we are short this market. We are short from 76. We have stops at 61. The reason for the stop at 61 was to protect us in case we saw some sort of spike that would go in to really bring the market back up, but at the same time not have the ability to make it through this triple top. I had thought about lowering stops, but I realized that the only place that any kind of stops made sense would have been under this point. We talked about that yesterday at around 1240. For those of you who were stopped out at 1240, of course, in at 76, out at 40, it's a nice trade. For those who are still maintaining their short positions, there's only a $3 difference right now between that and where the stop would have been placed. For the time being, then, I am going to recommend that we simply leave our stops where they are, 1261, because here's my sense. If, in fact, we get a genuine breakout, and a genuine breakout to the upside, it absolutely has to break above that point. It knocks us out, and it knocks us out with a decent profit on the trade. Certainly not the kind of profit we would have seen at 1211, but realize, traders, my strategy whenever I look to identify trades and actually put us in a trade is to be able to ride that trade for the longest period of time to kind of get any kind of sizable move. Now, we've seen somewhat of a sizable move, but my sense is interim term, we are still under pressure, and I still think that there's a real opportunity to see this market break $1,200 per ounce in gold. Now, on the bullish side of the fence, the one thing that I believe is fairly significant is the fact that the market is now trading above areas that we had defined as pretty critical areas, those being at 1223 and then again at 1240. Those are both 76% retracement levels. Each retracement sequence starts at 1181. One concludes at, call it 1365, the other one at 1435. So these two tops, we get these two 76% retracement levels. We have been able to trade and hold above that. Now, an aggressive strategy might be that if you see weakness, you can add to your existing short position. Our recommendation, of course, because I tend to take a very, very volatile market and try to play it in the most conservative way possible so that over time we can maximize profits, is simply to maintain our current long position. But as you can see, we are showing the market really beginning to come off of those highs, now trading at 43, 42 in that area. So we have seen some defined weakness come into the market. And when we look at it, even on this half-a-day candle, what we can see is a tremendous spike, but you can see the high here, and you can see how it's come off of the high. You can also see this cluster right in here of resistance. I'm still pegging pretty strong resistance between, call it 1250 and 1260. Therefore, our stop should be maintained at 1261. Now, we are looking at a two-day chart, continuous contract of COMEX Gold. And when we look at this chart, I draw your attention to the latest of activity. Of course, we're looking at a very long intermediate 3. This is our wave 4, puts us in wave 5. That's my current count. Of wave 5, the way I'm looking at it is we've had 1, 2, we're currently in wave 3. The question should be, could it be that wave 3 is over? We're going to see 4 and then our final 5th. To answer that question, is it possible? Absolutely. But I draw your attention to the following study. If, in fact, wave 3 cannot be the shortest of any of the impulse waves, and if we simply measure the move that we saw on wave 1 down. That's right here. And then extend that, of course, to this wave 3. As you can see, it has been my contention that a full wave 3, in other words, as long as wave 3 is equal to that of wave 1, that should take the market roughly to the intraday lows that we had at around 1181. That's where that call comes from. So within, of course, wave 3, there's no doubt we could see something like a 1, 2, and 3 count. If that is the case, what we really want to figure out is this length right in here, and then look at anywhere between 50 and 75% of that, and that would give us a termination point if, in fact, we do see a bounce to the upside. It's a little bit too early to tell, and also realize that this market is absolutely 100% data driven, meaning that it's waiting for fundamental reports and then reacting to those reports as a conjecture, as a assumption on what the Fed might do based upon economic reports that are just coming out in terms of being issued into the public eye. So that being said, as I said, I still think we have further down. I think that this clip up that we saw is probably technically based. It is probably simply short covering, although anything can happen with a new report coming out on Friday. And then lastly, as far as gold goes for a long-term picture, I draw our attention to this long-standing resistance line that we have had. This slope has really on a technical basis given us some real indications of weakness as it came into the market during rallies in the market. And let's assume that the market does begin to rally. I wouldn't really read anything significant unless and until it broke above and through this long-standing resistance point. Now, as far as silver goes, of course, you're getting the greatest of percentage gains, the greatest of percentage losses as this market moves up and down. The direction of this market in the long term has been down ever since it hit really this resistance up here at around 23 and has moved down. My sense is that one day doesn't make a turnaround. And until we get confirmation that we're really seeing something in the cards that's telling us we've got a key reversal, such as we got in this area, I've seen a couple of occasions where we've had these tremendous spikes up, but they were really not followed through with any kind of bullish endeavors in the market and any continuation, any building of a rally. And in essence, what we have seen is lower prices across the board in silver and gold. So my sense is that we simply want to maintain our positions, see if there's any kind of follow through. As I said, right now we're trading at around 1243, 1242, so it's slowly drifting lower as we approach the beginnings of trading in both Australia and Hong Kong that will happen in just a little while. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.